Market turns weak as H-1B visa issue drags IT names. Nifty and sensex end at day's low. Metal and media indices end in green while most indices slip into red. Pharma stocks drag on the back of profit booking.
IT stocks were the top losers on the Nifty after the Trump administration raises H-1B visa application fees to $100,000. TCS, Infosys, Tech Mahindra, among others, take a hit.
The new GST era is underway. India Inc. sounds optimistic. Bajaj Auto is expecting a strong festive season. Shoe retailer Metro Brands also expects to grow over 15% after the GST rate cut. Mother Dairy believes dairy ecosystem set to benefit too. Consumption stocks rally in trade.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vamakshi Dhoria and with me is my colleague Vivek. Well, Vivek, hi. It wasn't such a great day for trade. The initial recovery that we saw in the markets was sold into, of course, IT stocks were under pressure. We also saw, some fall in pharma stocks because the pharma index was also lower, down almost 1.4% today. Nifty FMCG also did not do too well.
That's right. Good afternoon, Vamakshi. Topsy-turvy session. We started off quite negatively, but intraday we did see quite a bit of a recovery. But towards the end of the trading session, most of the recovery was sold into, like you mentioned. Well, of course, you have to talk about the fact that you did see significant selling pressure across the entire IT pack. The Nifty IT index, as expected, was the top sectoral laggard. Other than that, you also saw some pressure coming in on pharma as well. But here's a lineup of all of that we have in store for you today. We start with the top movers and shakers of the day with Riya Bhatia. IT stocks are buzzing in trade following Trump's hike of the H-1B visa application fee to $100,000. Meanwhile, Voltas shares slipped amid management changes, while Garden Reach Shipbuilders surged after securing a $62 million order win. Last but not the least, we delve into the key market events to watch out for in tomorrow's trading session.
Absolutely, Vivek. Lots to watch out for. But on to our first segment then. Riya joins us now from the big wall with the top movers and shakers of the day. Riya, over to you.
Well, yes, I'm actually first taking a look at the stocks with positive momentum today. The first one is Garden Reach, up around 3% after securing a nearly $63 million contract from a German company for the construction of hybrid multi-purpose vessels. The next one is NBCC, up around 4% after a 117 crore order from Hoodco. Some other retailers were also in focus today. The likes of V2 Retail, Vedant Fashions and Electronics marked up between 4 to 7% today as the GST cuts come into effect and the festive season begins. Adani Group stocks also continued their strong momentum after SEBI's clean chit to the group last week. Adani Enterprises, Adani Ensol and Adani Green up anywhere between 4 to 12%, with the biggest gainer being Adani Power with a 20% upper circuit. Hindustan Copper was also up over 5% after executing a deed to extend the Rakha mining lease by around 20 years. State Trading Corporation was in focus today, up around 16 to 17% in its biggest single day gain and volume since July of 2024, and it has also broken above all its key moving averages. The last stock is Shalby, up around 11% in its third straight day of gains. It has gone up around 16% in the last three trading sessions and over 36% this month in the best month of 2025, and it has also turned positive on a year-to-date basis. Moving on to the stocks that were on the downside today, IT stocks were lower, down by anywhere between 2 to 4.5% as President Trump signed an executive order that raised the annual H-1B visa fee to around to USD $100,000 per applicant. The likes of Wipro, Infosys, TCS, Persistent Systems, Tech M and LTI Mindtree all lower in today's trade. Voltas was also down around 3%. The stock was under pressure even amid the GST cuts and the beginning of the festive season as industry volumes declined around 15% in the first half of FY26, and the company's primary sales have also remained quite weak. Swiggy was down around 2% after a downgrade from JM Financial. They've downgraded the stock to a reduced rating from their earlier hold rating with a target price of rupees 440. And lastly, shrimp stocks were also low in today's trade. Avanti Feeds and Apex Frozen Foods down around 2.5 to 3% as US Senators Bill Cassidy and Cindy Hyde-Smith introduced the India Shrimp Tariff Act in Congress last week. So these were the big movers in today's trade.
Thank you so much, Ria, for joining us and giving us a neat wrap of all of the top stock movers in today's trading session. Let's now go across to our guest, Sudip Bandyopadhyay, Group Chairman at Inditrade Capital, and Jay Thakkar from ICICI Securities. Good afternoon, gentlemen. Thank you so much for joining us. Jay, let me come across to you first. Have a look at the nifty move today. Does it appear to you that we are now facing exhaustion at higher levels? Do you feel that we may now slowly grind lower?
Good afternoon to you, Vivek and Vamakshi. Well, definitely, I think that, Vivek, with this kind of, 2 days back-to-back negative close in Nifty and kind of, selling pressure at the higher levels. I mean, today also, if you see Nifty open gap down and managed to recover, managed to bounce back with the good support of the, Bank Nifty. But then finally it saw, selling pressure at the higher levels around, 25,300, 350 range. And then again, we saw Nifty slipping more than 100 points in today's session as well. And with that, Bank Nifty also, which was already underperforming, but however, managed to bounce back for 11 to 12 consecutive days. But that also, gave up the gains today. And we saw both Nifty and Bank Nifty closing in the negative territory. In fact, Vivek, one important thing to note down is that since last trading session, that is since Friday, we have seen that India is going up, or rather, you can see the IB is also going up. The volatility is increasing from its extreme levels, right? And I think this is a clear sign of a short-term reversal in the trend, from up to sideways to negative. I think that 24,800 is an immediate support for this overall trend. I mean, if 24,800 breaks, then this uptrend will confirm a reversal from up to down. Till 24,800 is held, I think those levels can be tested back, no doubts about it. But until that is held, we can see Nifty trading, between 24,800 to 25,500 as of now. But then the upside, at least for this September series, now seems to be capped at 25,500 on Nifty.
All right, thanks so much for that, Jay. But, let's focus in on one of the big stories of the day. The IT stocks, they were the top losers on the Nifty after the Trump administration raised H-1B visa application fees to $100,000. Brokerages believe the impact may be limited. Rima is here to tell us more on this fee hike and how will it impact IT companies. Rima?
Thanks so much for that. Let's get to the numbers straight away. Now, companies have informed the exchanges, especially the mid-cap IT companies, about the possible impact. So let's start with First Source. That's a BPO company, and they say they're not impacted at all. They've not sponsored any H-1B visas last year or this year. Coforge says they filed for 65 new visa petitions. Of that, 63 were approved. Cyient, the number of employees on H-1B visa stands at 6 for FY25. For emphasis, 130 new H-1B visa filings in 2025. Hexaware, while last year there was none, but overall the company has been bringing down the dependence on H-1B visa. Persistent hasn't given a number, but they do say that they don't expect any significant impact on the operations or on the financials. But as you see, from these numbers which have been shared, that while there will be some impact, costs may go up in FY27, there could be some marginal impact, it's not a very big impact. Analysts point out the EPS estimate or hit could be 2, 3, 4%, and there are mitigating factors. Companies could look at local hiring, increasing subcontracting or near offshoring, and the actual impact may be even lower than that.
Thank you so much, Rima, for joining us and giving us a sense of how exactly this particular move will impact the IT space. Nifty IT down almost 3% in the session today. But now moving on to a CNBC-TV18 exclusive, PFRDA's investment committee is likely to issue guidelines to trade in commodity derivatives within the next 10 days. Yash joins in with details on this move. Yash, what are you picking up from your sources?
Well, this is quite unprecedented because in the past, never has the pension fund traded in the commodity derivatives market, but the whole rationale behind doing so is to diversify its investment pool and enhance returns for the subscribers. What we've been given to understand is that PFRDA's investment committee may issue guidelines, finalize and issue guidelines when it comes to trading in commodity derivatives, and that could happen as early as in the next 10 days itself. After that, what we've been given to understand is that once those guidelines have been issued, PFRDA board could take up those guidelines for approval in its October board meeting. And once the board approves it, those guidelines could be put in its investment regulations, after which schemes could be launched where underlying could be trading in commodity derivatives. Sources tell us that PFRD is expected to initiate commodity derivatives trading with gold and silver, but not stay limited to those commodities. It will also study new commodities, and as and when the board is convinced, they may enter trading into other commodities as well. So, of course, it's a large pool that may come into the commodity derivatives market. Remember, PFRDA manages assets of about 15 trillion rupees. So, of course, a large pool there, whatever portion of it comes into commodity derivatives market.
All right, and Yash, do stay on with us. Take us through the KFin Tech block deal as well. What are your sources telling you on this particular front?
Well, that's correct. So, of course, what we've been picking up from our sources is that General Atlantic, which is a promoter shareholder, may look to sell anywhere between 10 to 15% of its stake in KFin Tech via block deals. As per our sources, the brokers to this block deal are IIFL as well as ICICI Securities, and the brokers have already sounded off insurance companies as well as mutual funds as a part of the book building process. What we've been given to understand is that this particular block may happen at a discount of about 5 to 8% to CMP. Also, as far as General Atlantic is concerned, previously also thrice, it has sold its stake once in the third quarter of FY24, that was about 10% stake. Next, in the first quarter of FY25, about 6%, and first quarter of FY26, that was 10% stake. And now it may be looking to sell another 10 to 15% stake at a discount of about 5 to 8%. We've written to, of course, both General Atlantic as well as KFin Tech. General Atlantic said that they do not comment on market speculation. We are still awaiting a response from KFin Tech.
Right. Thank you so much, Yash, for joining in and giving us details of those two important stories you've picked up from your sources. Moving on, Sudip, you've been waiting by patiently. Thank you so much for that. You heard Rima speak about the impact of IT as far as individual companies are concerned. How do you look at the IT pack in the current context? Do you feel a few of them may be attractive for the longer term, or would you stay away from these names, at least for the near term?
Well, even before this H-1B fee hike by the current US administration, we were very cautious on IT. We believe that Indian large IT companies have a lot of challenges in the near future. Beyond the usual challenges of orders slowing down, I think AI is a reality, and with AI becoming a reality, US corporates will look at cost rationalization by using AI, and the impact of that will come on the margins of Indian IT companies which are servicing them. So the margin pressure, beyond everything else, even assume that everything has stabilized, US markets are doing great, but the margin pressure for Indian IT companies will be there. So we have been cautious, and we believe it should be a wait and watch kind of a scenario for large Indian corporates. We should focus, of course, on niche IT companies which are catering to segments like travel and tourism, which is booming. And you can look at travel tourism companies, IT companies which are catering to travel and tourism sector. You can look at the auto component and automobile related technology service providers, because there is a massive transition happening from ICE to EV, and the importance of technology is increasing. So focus on these kind of niche segments of IT companies. I think that is what is worthwhile at this stage, not plain vanilla large cap IT companies.
So overall cautious on the IT pack, but some of these niche sort of companies, that is something that one can look at, is the advice coming in from Sudip. But Jay, coming to you then, I'd like to get your word in on a couple of these data center plays. NetWeb, of course, on the back of an order win today was up almost 8%. In fact, in the last 1 month, the stock has rallied by over 50%. Anantraj is the other stock that I'm also talking about, is 6% higher, today. So, and over the last couple of sessions as well, the stock has done quite well. So, Jay, your word on both of these stocks, how are they looking like on the charts?
Sure, actually, see, first of all, they both are non-FNO stocks, so I'll be commenting based on the quantitative data. And what I'll look at is that NetWeb definitely has been trading about previous highs of around 3,080, 3,100 levels, and which is positive. The overall momentum is quite positive out here. It's trading well about 3,100 levels. So from the medium to long term perspective, Vamakshi, I think that till these levels are held, the overall trend for NetWeb is going to be positive only. And one can definitely look out for buying opportunities on dips. Recently, too, this stock has provided a breakout beyond the levels of 3,200s. So for the short term, 3,200 is the support. For the medium term perspective, I believe 3,100 is the support. As far as Anant Raj is concerned, I mean, these stock two since last two trading session, Vamakshi has been, showing good positive momentum and has been trending higher. In fact, recently it has, broken 636.40 range, which is also quite a resistance for the stock, and closing above those levels clearly indicates the overall trend to be positive in this stock. And there is no major hurdle now until, the levels of 800. So from these levels too, if at all there is a dip, one should be utilizing it as a buying opportunity, because the risk reward is favorable for both the stocks, on the buy side.
Right. Thank you so much, Jay, for giving us a view on both of these names. Well, one particular stock from the consumer durable space that was under pressure today was Voltas. This is post the management's business update that they shared with analysts during an analyst meet that they held over the weekend. Upasna is here with the key takeaways from the meet and what to expect in Q2.
Well, certainly. Company recently held a management meet, and here are some of the important updates. Now, company says that the primary sales continue to remain soft for the company due to higher channel inventory and also deferment of purchase led by GST rate cut. Even margins, company has said it's likely to see an uptick from Q4 onwards as channel support will extend Q3 till Q3 only. Now, overall, company is confident that the pickup in demand momentum in H2 FY26 onwards will be aided by several factors such as festive season, GST on RAC, pent-up demand due to weak summers, and also delayed purchases by consumers for 5 weeks. That is the time gap between GST rate announcement and the effective date. Even pre-buying is what they are anticipating ahead of new BEE norms, which kicking next year onwards. And company believes that the weak summer should result in good festive season demand. But overall, if we look at the industry volumes in the first half, they are down by as high as 15%. Now, brokerages are of the view that the festive tailwinds and GST triggers could lead to a demand revival, but it could be slow in H2. So, on the back of this, Citi has given a buy rating of 1800, MOSL has given a neutral rating, while BofA has given an underperform with a target price of 1200, and Goldman Sachs has given a sell rating with a target price of nearly around 1100. So that's the reason why the stock remained in focus today.
Well, thanks so much for that, Upasna. And Sudip, would like to come to you on this. Now, of course, we have seen all of these AC companies had an absolute washout summer on account of the preponement of the monsoons. And, now there is a hope that probably on account of the GST rate rationalization, there could be some bump up in demand. What is your view, at least in the next 1 to 2 years, for a counter like Voltas?
Well, I'm positive, very clearly, Vamakshi. Look, I think, first quarter has been a washout because of early monsoon set in and low demand. Second quarter, again, which we are at the fag end of, will be subdued, pretty much on the back of the fact that monsoon season and postponement of purchases because of GST rate rationalization, which is effective from today, actually. So last 3-4 weeks, there were hardly any purchases. So obviously the numbers will be subdued, and Q2 numbers, overall, the financial numbers also when they come out will not be anything great. So probably some more correction we may get to see in these counters. But beyond that, I think Q3, Q4, we are looking at a lot of demand pickup on the back of multiple factors, which were just now being talked about in GST rationalization, income tax relief, pent-up demand, and a whole lot of other factors. So I think the companies, if you're talking about a couple of years, I think both Voltas, of course, we like Blue Star more, but Voltas also should do well. This entire segment will do well for the next 2-3 years. And one can look at buying into these stocks, taking opportunity of these dips from a long-term perspective.
Well, thank you so much, Sudip, as well as Jay, for joining in. Giving us a view on the markets, individual stocks, and your view on the consumer durable sector as well. With that, it's time for a short break. India Inc. sounds optimistic about the new GST era. On the other side, we get your top corporate voices on GST rate cut and how it's set to benefit different sectors. Stay tuned.
Welcome back. You're watching Markets Forward. Let's go across to what India Inc. had to say on GST rate cuts. First up is Bajaj Auto. The management is expecting customer sentiment to be positive on the back of GST cuts. Further, Bajaj Auto is expecting growth to continue beyond the third quarter. It also is upbeat about the festive season. And that's not all. The company is hoping to close above FY19 peak this year, and it is confident that the industry will grow around 6% in FY26.
PSU bank major Punjab National Bank is banking on the GST rate cut. It expects the cut to bring a lot of relief, especially in sectors such as agriculture, retail and MSME. The management calls it as a game changer for retail as rising disposable income boosts consumer demand. Meanwhile, vehicle and housing segments within retail are seen as key growth drivers. Further, it expects GST reforms to add around 1 to 2% growth.
Well, next on our radar is Shriram Finance. The company's management believes vehicle makers are likely to offer smaller discounts. Further, expects growth to be in the range of 2 to 3% higher this quarter. The industry is also expecting measures like interest rate subsidies and lower power tariffs.
Next up is Thakkar Industries. The management said Molycorp acquisition will be EPS accretive from FY27. This deal is expected to enhance value for customers globally. Further, the company plans to raise 2,300 crore rupees via the equity route. It has already received confirmation of participation for 2,000 crore rupees.
And before we wrap, we bring you some key market events to watch out for. Upasna is standing by with the key events to focus for tomorrow. Upasna.
Well, first up, let us start with the global economic cues. US will be reporting its S&P Global Manufacturing PMI data, and Japan will be also reporting its Manufacturing and Services PMI data. So we'll be closely watching out for both of these counters. Now, let us look at the key stocks that will be on focus on back of corporate action. Tomorrow marks as the record date for the bonus issue in the ratio 1:1 for companies like Pidilite Industries and Time Technoplast. Piramal Enterprises will also be in focus tomorrow, as tomorrow marks as the record date for its merger with Piramal Finance. And also lastly, Sudarshan Chemical will be reporting its Q1 FY26 result tomorrow. Now, coming on the IPO front, both the IPOs such as Anand Rathi and Jaro Institute of Technology, it opens for subscription tomorrow. And when it comes to the listing, Euro Pratik Sales, a total issue size of 451 crores, will be listing on the exchanges tomorrow. Now, PMO is scheduled to meet on 23rd of September to help create domestic Big Four. And lastly, JP Morgan's, that is 10th Annual India Conference, tomorrow marks as the day 2 for that. So we'll be closely tracking for that as well. So all in all, looks like quite an eventful day tomorrow.
Thank you so much, Upasna. Promises to be an eventful day tomorrow, like you mentioned. But with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.